When there's a major drop or jump in price, Bollinger Bands generally give us a better idea of the expansion and contraction of volatility. And when it comes to gaps, both these indicators don't experience much distortion compared to most other indicators. In this case, when the gap immediately starts being filled, we look for %B to quickly go back under 100 and price to close under the upper Bollinger Band. When there's a gap down and we're looking for a strong bearish continuation, we want %B to stay very close to 0 and for price to remain around the lower Bollinger Band while the Bollinger Bands expand. When moving towards more stable and shallower portions of a trend, %B will more frequently be fluctuating between 100 and 0. With this gap down, we see a similar phenomenon to what we saw at the end of the last video, where Bollinger Bands %B is rising away from 0, while price is neutral to slightly bearish between the upper and lower Bollinger Band, which still have a wide area in between them. And only after the Bollinger Bands begin to significantly contract do we see %B more closely resemble the movement of price on that shallow decline. And as usual with a steady upward reversal, we'll see %B hover around 100, while a consistent row of green candles remains near the upper Bollinger Band. Now price is more range bound, and even with the presence of gaps creating more volatility, when just using the Bollinger Bands %B indicator, we still look for values to cross back under 100 as the gap up begins to be filled. And it's the opposite with this recent gap down. We'll be looking for %B to cross back over 0 during the gap down fill. Here are some more examples of the same thing, but during a period of more constant short-term volatility. Here's a similar situation to what we've seen before, except it's with a gap up. Price remains flat to slightly bullish, while the Bollinger Bands %B indicator presents a slight decline, due to price still being relatively low compared to the upper band because the bands are still far apart prior to the major contraction. It's just like the gap down situations we've seen before, only in the reverse. Speaking of which, one is happening right now.